Hi guys, DT here. You're looking at S&P 500 daily chart. Before I start talking about it, I would like to state obvious that a lot of traders don't want to accept a simple solution, a simple way of thinking, and they try to overthink it and they deviate from the systems they've been using for a long time. And of course, I'm one of those sinners, because of a lot of noise, I losing the sight of big picture, so to speak. Anyhow, to the chart. This is what we had for a long time. All right, this is a March bottom right here, and this is wave 1 or A. Of course, it was locked only after B and 2 printed here. The problem here was going long for me personally was very shallow retracement, only 23%, but at that time when everybody was looking at head and shoulder to break down, I said don't be short. So up we went, and unfortunately when wave C printed here, I started to go short and capture small moves and made my life increasingly difficult, and preferred not to see, well, I saw that, but preferred not to play wave 3. The target was 1120. Alright, 1120, somewhere around here, 162% retracement. So back in January, wave 3 printed, we caught sell-off precisely using these two trend lines they pointed out on January 21st, around that area. So when wave 3 finished and wave 3 printed at exactly 1047, that line was on the chart long time, at exactly 1047 when I expected it. That was in a post of February 2nd, the target 1047. Now presumably we have wave 5. This is where I have another problem. Wave 4 retraced only about 30%. That's very difficult to imagine that both waves retrace such a small amount of corresponding up wave. This is why I'm still kind of expecting this not to print wave 5 but collapse and set new low. I might be wrong, alright, but most of the turns, and let me show you that. Alright, most of the turns, as you can see, beginning from here, consolidation, turn. Most of the turns really happens at options expiration dates. Let me get rid of it. And we only 3 days away from triple witching, and basically this is quadruple witching because on Thursday option index options are going to expire and futures are going to expire. If I'm wrong and market will continue to go higher and market will break this trend line, all right, that's trend line in place since that wedge originated sell-off. If that's going to happen, this is where we're going. Alright, so no one will say that I didn't say that. This is where we're going, 1325. This target is calculated using multiple ways, and this is the most likely outcome. The funny part is, if it's going to happen, weekly wave structure is still going to be intact and still going to be bearish. But I said long time ago, don't expect huge sell-off. It's going to be slow grind down after that bull market is going to end. David DT, Trading-to-Win.com. Trade well.